Today I bring to you old American classic, McDonald's. McDonald's have had a terrible uh, period since June, and the earnings around here kind of create a gap in the graph. And McDonald's overall have had a really kind of rough last 6 months in a lot of ways. McDonald's tend to do less good in economic recovery as we see in America right now. In the US, we see some kind of recovery. People are picking up those jobs. It's not going fast, it's not going as fast as we have hoped, but it is happening, and people tend to have a little bit more money in the pocket. So people kind of opt for real restaurants. And here's the kicker to this. Unfortunately, McDonald's, people tend to opt for, even if they still don't have so much more money as they want to go to a quote-unquote real restaurant, they still go to the places that are just one tiny teeny level above McDonald's. We're talking Panera Bread, we're talking Chipotle, we're talking Boston Market, all these places that cost a couple more dollars, but it's still much cheaper than real restaurants. Those tend to do really good in this sluggish recovery as we have, because people don't have that much more money, but they have a little bit more money. So people tend to think that, oh, I'm going to stay away from McDonald's. So that is their problem right now. However, I do believe that McDonald's have the know-how to reinvent itself. First of all, before we go into reinventing stuff, I just want to make sure everybody understands that a lot of the sales from McDonald's comes not from America. A lot comes from Asia, and actually a lot, not absolutely not the most part, but they have significant sales in Europe, and Europe is still slugging, and Europe is still in far from a real recovery. So Europe can still support McDonald's, the old-fashioned McDonald's we all know, with the $1 cheeseburger menu. Of course, in the euro area it would be euro. I don't know what the cost there, euro 50 or something, a cheeseburger. But that's not the point. The point is that they can still kind of survive by just being the cheapest. However, that won't work in America, and it probably won't work in Europe when Europe start to catch up with us. Europe entered this deep recession after us. It spread from us. The subprime crash spread from us over the Atlantic, and now they're behind in the recovery. Just stands to reason. However, this health trend we've seen in the last 10-15 years are really starting to penetrate the great masses. Celebrities and wealthy of people have been fooling around with health diets and stuff like that since the early 90s. Probably before that, celebrities always been very health conscious for a long time, but it really starts to penetrate the lower classes, if I can say that without being rude, the common man. So people tend to opt for the salads and the less unhealthy stuff, which is of course good. But McDonald's have a problem here. They are not seen as a healthy choice. They had the same problem before in the mid-90s, and they kind of reinvented itself by introducing the salad, and they kind of took down and stopped asking if you wanted to supersize and stuff like that, and it kind of rebounds just by that. This time I think it takes a little bit more effort, but I think that McDonald's as a company have the human capital, the know-how, and the manager and directors to know how to handle the restaurant business. These guys are the masters of the restaurant business, okay? So I do not think that this is the end of McDonald's. However, while we wait for that, which may take a year or two before they really figure out what to do and the stock takes off, I think that this is actually somewhere where we're gonna be trading for a long time. McDonald's right now has a dividends yield of 3.5%, which is of course fantastic in when we're looking at most of the stock exchange, approaching all-time high, most of the stocks, and we're looking at yields around 2 or 1.5% or something like that. So this is really great, and this is of course based on last year's earnings, which is predicted to come to be higher than this year's. Hence, the sloping price. But even if we're looking at 3%, yield, that's still great. 3%, and a company like McDonald's, that's amazing. McDonald's ain't gonna go anywhere. It's gonna be here for a long, long time. I was about to say forever, but I was gonna say that. But I'm gonna say for a long, long time. So that kind of gives a support to this stock price. If you start approaching 4 or 5% as a big, company as McDonald's, that's ridiculous. So I think we're gonna lay here until the earnings improve. And when do they improve? Well, they start improving once McDonald's starts reinventing itself for real this time and really providing those healthy alternatives. Maybe, just maybe for a few cents more. They don't want to destroy the image of having cheap food either, because that is still their main sales, and this would be really foolish. But maybe have both cheap and a little bit more upscale in the same restaurant. I don't know. I'm not employing McDonald's, so I'm not going to say that. I'm going to leave it to the experts. But I know that they do have the experts who can answer those questions. So that's why I'm very bullish for this stock right now. And what is more interesting right now from a trading perspective is the fact that we are in a bull market, as you all know. No one missed that. We're all rich now, right? The stocks have been going up for years now. So what happens in bull markets? Well, gaps tends to be filled. So we're having actually a gap that is 97.50. Where the trading day before the gap was 97.50, and that gives us a nice upside compared to the downside, which would be very limited for McDonald's considering the yield. Okay, what is I kind of worried about is the last 6 months. All the big trading days, except maybe one, have been during days when the stocks have been trading down. That kind of shows to me that people are kind of nervous about it, and when the stock starts to slope down a little bit, people tend to rush for the door. Maybe all the sellers are out now. I don't know. I'm not gonna speculate in that at all. But if you want to be conservative, you could definitely wait and see those volumes during days when the stocks are trading up pick up a little bit. So you see a couple of days with high green bars instead of just this red boring stuff. That's one thing you could do. However, I already went into McDonald's. I think this is a great stock. 3% yield in today's market is unbelievable. We have a gap here. I mean, this is a great stock. This is one of the those old time big companies of that's gonna stay around for a long while. Warren Buffett owns this stock. Well, I'm not going to say that again. I said too much maybe. He did own this stock. I don't know if he still owns it. He might. I don't know. But I know that he have a long relationship with McDonald's. So this is great, guys. Just buy this, pocket it for the yield for a couple of years. And then when it goes around 97.50, we maybe try out 100, maybe 102, maybe do a new all-time high 105 maybe. Then we can start dropping off our positions. But meanwhile, collect the 3% for 1 year or 2 years. Look at 6% of the initial investing already, and then you have this upside on top of that. This is great, guys. So thank you very much. That was the tip of the day. Please like and subscribe. Have a nice day.